Searches. Stacey Raskin, he's on the ground at Nvidia's conference. Stacey, great to have you with us. We were talking about Nvidia and how, this is not necessarily the audience for it. Jensen had a lot of technical things to talk about. But in terms of answering the burning question of investors, and that is the CapEx spend picture in place? Is that steady? Is it rock solid? Did you get anything from what he said today to answer that?
Well, I mean, at this point, I don't think that we're seeing any signs that it's at risk. If anything, he gave us a view of the roadmap going forward for the next several years, and the performance improvement and the total cost of ownership improvement for the future platforms as you go from Blackwell to Blackwell Ultra to Rubin Ultra, to even talk about Feynman in 2028. We're talking another, I think, more than an order of magnitude improvements in performance and total cost of ownership for the next couple of years. It is going to be a very NPV positive thing for customers to upgrade. So I don't think we heard anything that Jensen said that would suggest that CapEx budgets are getting ready to roll over. And again, who knows? We'll see when we get there. But at this point, I thought it sounded great. I thought he did a great job.
Yeah, you won't know right now. Jensen won't know. No one knows. Like, the big tech companies really start figuring out their next year budgets in the third quarter and fourth quarter of a year. So right now, these companies have already set their 2025 budgets. They'll assess what they want to do for 2026 in the third quarter and fourth quarter. So you got to still get through the spring and in the summer. And then in the fall time, that's when Nvidia is going to start to know, are these guys getting ready to cut back? Nvidia will probably know even before investors know, because usually companies like this will place orders months in advance, essentially, if not a quarter in advance or two. And so you'll know if Meta is going to cut budgets or keep budgets the same or up budgets based upon what Nvidia's guidance is looking like at the very end of this year. So Jensen can't say anything. No one knows anything right now. We'll find out more later on this year, right? At the end of this year, essentially.
There's still skepticism, though. I mean, that's the thing with investors. If you are a believer that there is a growth scare, that there is a recession on the horizon, can you be bullish, Nvidia? I think Nvidia outperforms?
I don't think that's an Nvidia question, right? That's an everybody question. If we're going into a recession, I mean, semis in general tend not to do well in recessions. Again, there are some secular drivers here. I think they can hope to offset some of that. Clearly, the AI spending is happening. There are business models, cost reductions, revenue models that are starting to get built on this stuff. There's this whole long-term trend that he talks about as you move from.
Let's be very clear here. In a recession, let's say we actually go into a recession, right? 2026. Let's say a recession hits 2026. Listen, AMD is still going to have great growth, regardless of recession or not. Nvidia's business is still going to be relatively at least stable, even in a recession. And the reason being is, who are these companies' biggest customers? They're the biggest, strongest companies in the world. The type of companies that are, I want to say recession-proof, but pretty darn close, right? Like Meta. Meta's going to put up numbers regardless. It's just a question of, our growth rates 5%, 15%, 10%, 20%. That's the only question. Microsoft's going to put up numbers regardless, right? I mean, people are going to stay subscribed to all their Microsoft products and the cloud and all that stuff. Don't matter what, Microsoft's still going to make crazy money. Google's still going to make crazy money. Meta's still going to make crazy money, regardless of recessions or not recessions. So that means they can continue to invest in their businesses, regardless of recessions or not. So now they might not invest as aggressively, but they're still going to invest a lot. And so, investing into AMD, I'm not scared of investing into AMD even if we were to go in recession at all. AMD is going to grow regardless, in my personal opinion. Based upon the chips they got coming out and the type of companies they're going to be doing business with, I'm 0% worried, right? Obviously, I'd rather have a better economy because that means their numbers will be even better over the next few years. But regardless, if companies want to get a little more value conscious, they'll go to AMD, right?
Or traditional computing to accelerated computing, which is a massive cost saver. So there are other drivers. Again, in a recession, you want to save costs and dial back. And these are investments, I think, that can pay off. But, I mean, if we go into a significant global or local recession, I don't think anything in semis does all that well. At least NVIDIA does have some of these structural drivers. And I've said this on the program before, but it's not even expensive. It's like in the low 20s if the current numbers are low 20s price to forward earnings if the current numbers are anywhere close to being correct. And there's a lot of other things out there that are much more expensive that I think are likely to get hit just as bad or worse from a fundamental standpoint in a recessionary environment.
That's fair.
Yeah, so price to earnings, you're right. But, Dan just mentioned the competition coming, and obviously we saw deceleration. Well, I mean, you probably were listening to some of the things that Dan said. I mean, we heard from Alibaba. We heard a month and a half ago about the DeepSeek things. I mean, clearly people are going down that road. Whether or not they can catch up remains to be seen, but they will compete on price. So I guess my question is, how concerned should we be about potential margin deterioration from here?
Again, I don't think it's about price. Like, the price of the chip is only one component of the purchase decisions. What really matters is total cost of ownership. So that's the price of the chip and the power and the cooling and like everything else that goes into it over the lifetime of that chip's lifetime, based on what kind of performance you can get out of it over that time frame. And I think Nvidia, I mean, even today, I mean, you can see where the dollars are flowing. They have the lowest TCO. And if you look at, again, the roadmap and the improvement trajectory that they laid out today, I think it's going to be hard-pressed for many of theirs or any of their competitors really to have a significantly better TCO. And that even that ignores the fact, like everything else that they're doing around software, around systems, hardware, ecosystems. They talked about co-packaged optics now that they're bringing into place, networking. They're the only ones out there with a full stack hardware and software solution. Like, nobody else has that. Like, I'm not terribly worried about their ability to compete.
Stacey, it's interesting.
AMD is very close, especially once that deal with ZT Systems goes through.
What competition, with a big question mark? Maybe two question marks after that. And, when I look at the analysts, there's 76 that cover it. 70 have an outperform or buy on it. The average price target's $172. The stock's trading at $115. It's down 25% from its all-time highs. So there's a disconnect between what investors think and what Wall Street analysts think. And then when I hear a Wall Street analyst be really skeptical about any competition, we've all been doing this a long time. That competition comes from the place that you don't expect it. So I really want to focus on the disconnect between what investors see and selling it and versus what the analyst community thinks.
Sure. So first of all, it's not just Nvidia. Like, there's been a broader degrossing. It's not just Nvidia that's come down. I do think that, again, there was some nervousness. There was the whole DeepSeek thing, which, by the way, I think the only thing we've seen since DeepSeek was infrastructure spending going up, not down. And my view on DeepSeek, again, we may have talked about this, is I thought DeepSeek was actually good news, not bad news, but it is what it is. You can look at where the competition is driving. There's other merchant suppliers. You have AMD, and I guess maybe Intel's still in there. And again, I don't think AMD. I mean, I even question the need. Frankly, I mean, I in terms of second source, I really do think it's going to be the hyperscalers doing their own chips. These are ASICs, and Google does GPUs and everything. I think it's the wrong time to worry about it. I think the right question asked right now is not who's winning or losing between like GPUs and ASICs. Is the opportunity in front of it still big or is it not? Because if it's still big, then they can both thrive. If it's not, they're both screwed, right? So I think you have to believe that we're not on the saturated part of the S curve now. I don't think we are. My guess is the market. I think I said this. It's Nvidia's game to lose. Like, I think full stop at this point. They're not showing any signs right now that they're losing.
So, first off, I think he's, I don't know why Stacey never gives respect to AMD and what they have in the marketplace coming here. I think he's making a big mistake in regards to that, right? He's not taking AMD nearly serious enough, and I think he should take it much more serious. He seems like he's just like, just Nvidia fanboying and not really looking at everything AMD has going on and everything they have coming, and training versus inference and how AMD chips could really benefit from inference specifically over this next 5-10 years. So, and then all the acquisitions they've done over the past year or two that have really positioned them to be in a very successful place for this next 10 years. Intel, I wouldn't take them serious. Like they're in a whole world of trouble in regards to Intel. But yeah, competition is not the main problem. The main problem is just trying to get Meta, Microsoft, Google, all these companies to then go ahead next year again and say, you know what, NVIDIA, we're going to spend another 25% more with you, 35% more with you, 45% more with you than we spent this past year. That's the issue. And that's the only issue. That's really the only issue with NVIDIA. Because in order to put up great growth numbers again, they're going to need Meta, Google, Amazon, Microsoft, all these companies say, you know what? We're going to spend another additional 20% next year, 30%, 40%, 50%, because that's where the money actually comes from. OpenAI, we're going to spend another extra 30%. And I just don't know if that's coming, to be quite honest with you, for Nvidia in 2026. And that's where the whole problem comes from. And who was the one that called out this whole problem, almost a year ago now? Called this out way before, and now, this is like a big subject that's talked about everywhere, and it's like, I told people like this was going to happen like back in 2024. I was explaining like this was going to be an issue. Like 2024 numbers are great, 2025 numbers are great, 2026 we're going to start having a problem, everybody's going to start questioning numbers, and then boom, everybody did exactly what I said they were going to do.
Dana, D'Auria, guys, good to see you both. So, Paul, Nvidia didn't rescue the mega caps today. What does that mean for reaction to the Fed's tone tomorrow, you think?
So I think in Nvidia, it could be the greatest thing since sliced bread. Jensen can say whatever he wants, but the most important thing, as we said when I was on the day they reported earnings, is the reaction to the news. And if you see what happened in Nvidia today, the stock peaked right at 1 o'clock, and investors sold into the news there. That's been happening with every rally in Nvidia over the last 6 months. And until that pattern changes, it doesn't matter what they say. Investors are selling into any strength in the stock. So I think in that respect, for the stock itself, that's not a great sign. But for the NASDAQ itself, Nvidia closed near the lows of the day today. But the NASDAQ, since from about just a little before 10 to the close, it traded in a relatively tight range there, and we didn't see the late day sell-off, which has become so common. So I think going into tomorrow, the Fed decision, I think there's not going to be much of a surprise in that. So, I wouldn't read too much into what the Fed's going to say. I think the market's just going to try and find its bottom here, and we're going to see that over the coming days, maybe weeks.
Well, Dana, investor sentiment certainly seems to be souring, but U.S. stocks still aren't cheap by historical standards. So at the same time, huge day for Europe, its largest economy. Germany votes to open the debt floodgates. So where should investors place their bets?
Well, I think you're onto something there, right, with international. I mean, look, we're proponents in general of international diversification. What's happening right now in the U.S. is a prime reason for that. Having a portfolio with, not only ballast and fixed income, but also diversified across economies. Because look, I mean, the U.S. markets have dominated for so long. I do a lot of CIO panels. If there's any theme that seems to be constant in the last couple of months, it's been U.S. predominance. So, for sure. You should have international diversification, right? So I think for precisely that reason, for the contrarian signal of it, I think investors in general need to diversify just in order to deal with the uncertainty that we have right now. I mean, you look at what happened when we were going into this administration. We thought we'd be moving away from China, more Mexico, maybe more Canada, more friendlies near us. And then, of course, tariffs completely upset that. So, I mean, I think the market is dealing with such uncertainty. You really do what you gain from a diversified portfolio is even more important in a market like this than typically.
Paul, in the near term here, I just wonder how much noise is in this market. And I ask that knowing that Friday we've got an OPEX.
So one of the big problems that, one of the big mistakes I would say investors make in a market like this is they look at whatever's going on short term and they start thinking, you know what? I need to do this thing because of the short term thing that's going on. Oh, this tariff threat, blah, blah, blah. So I need to buy European stocks because European markets are outperforming the U.S. markets right now, or whatever. Like they start running these conclusions based upon short-term things, and they start missing like the long-term horizons. In the stock market, it always pays much better to just focus on the long-term opportunities, the long-term great companies that have years and years of growth ahead, right? And that you can easily see how this company gets bigger and bigger and bigger over the next 5-10 years. And focus your time and attention there, right? And so when I look at somebody like an Amazon, perfect example of a company, like I can picture it literally exactly how Amazon continues to grow and grow and grow for many years to go in the future. Next point I want to push back on here is, the market being so expensive. But where though? Is Meta very expensive here? No, Meta's cheap. Meta's trading at a forward P in the 20s right now, low 20s likely, with double-digit growth for years to go in the future. No, that's not expensive. Amazon, same exact situation. So that's I wouldn't say that's very expensive. Google's trading very cheap right now. Now they're going through a bunch of government issues right now, so they're probably cheap for a reason. But still, like, you can't say Google stock's expensive. Like, Google stock's cheap. Nvidia stock, you can't say that's expensive here, right? You can say it's either fair value or undervalued here. AMD's undervalued here. If we want to look out to Apple, Apple, you could say maybe a little overvalued, but at the end of the day, it's Apple. People break an iPhone, they go buy another iPhone. They break an iPad, you're paying for that stability. The services revenue continues to pour in. It's almost like, just a guarantee for them. So even they're hard to make an argument that they're expensive here. Microsoft's business is one of the greatest business models in the world that just continues to recur. And so that business model, at their PE, their forward P is likely in the high 20s right now. That's not expensive. So I'm just trying to find, where's the market so expensive, right? And you look at the Russell stocks, small cap stocks are trading extremely cheap right now, right? So, the travel-related stocks have come down immensely in valuation. Many of them have been cut in half or more. So it's hard to really find where the market's so expensive unless you're looking at maybe, healthcare or defensives or something like that. But yeah, there's a lot of steal deals all over the market right now. And I spoke about 8 stocks on the main channel last night. I don't know if you guys got to see the main channel video last night on financial education. I spoke about 8 stocks that are great buying opportunities right now.
It's expected to be one of the largest expirations of all time. You've had this FTSE Russell adopting new rules that limit the influence of the largest stocks, a.k.a. the Mag 7. That's expected to affect more than $7 trillion worth of equity funds that are having to reshuffle. In light of that, how much should we be thinking about or factoring in the impact of some of those moves technically here, at least in the near term, versus the bigger picture as we do come out of this correction, which I know you've got some historical context for us on as well?
Yeah, so I think in that respect, there's always going to be a multitude of factors impacting things. And, so some of these mechanical adjustments, like you just mentioned, Morgan, that can impact things. And to Dana's comments before about talking about international versus domestic, you always want diversification. And as exceptional as the strength has been in international stocks over the last 2 months, on a relative basis, they're back to where they were in October. So they saw historic underperformance from that period, right when The Economist put the U.S. exceptionalism on the cover. They saw a historic underperformance up until January, and now international stocks are seeing a short-term burst of historical outperformance. So I think in that respect, for the market overall, though, historically, when we've seen these sharp pullbacks and these extreme moves, they tend to reverse themselves over the course of the coming weeks and months. So in that respect, I would think that you've seen some oversold conditions in U.S. stocks, and you should see a bounce here going forward. Maybe not in the next week. That tends to, the market tends to, make the most people upset as possible. But as we go out into the next couple of months, I think you'll see U.S. stocks start to rebound.
Yeah, in terms of when the market bottoms, I've felt like March, it feels about right for kind of a market bottom here, but we'll see. And I'm ready for whatever comes, okay? Hey, it's Jeremy. I hope you really enjoyed that clip here today. Would you like the ability to understand how to do your own research and not just rely on others to tell you which stock to buy? Would you like to have confidence in yourself when it comes to making your own investment decisions out there? If you're going to be able to do that, you got to have full understanding of everything you need to look for in stocks, how you can decipher whether a stock is a buy, not a buy, all those sorts of things. That's where my private group comes in to help. The description area down there will have a link to apply to join my private group. We've taken over 1,000 people over time and been able to teach those folks exactly what to look for in companies, how to research companies, how to understand financial statements, understand all the different metrics so you can make judgments on companies. And we've been able to have so many people, an incredible amount of people, hit 6 figures plus in their portfolios, 7 figures plus, even some hitting 8 figures plus in their portfolios over time. So if you're looking to take your game up to the next level and play this on a much higher level, apply for my private group. Once again, the link is in the description area. Amazon. you understand there's three core segments of Amazon. They own a lot of different businesses, but there's three big dogs that really matter. Their e-commerce business. Their e-commerce business has a Prime attached to it, right? The Prime business is phenomenal. It's like the Costco membership, but on steroids, right? It's just like, they're able to make a lot more from it. They're able to get people more locked in the ecosystem, able to get them to just continue to buy from Amazon, right? So when does the e-commerce business for Amazon stop growing? I don't know, but I don't see it anytime soon. I mean, we're probably talking that's decades from now in regards to e-commerce business not growing anymore. That's so far in the future. Like, you got to understand, in order for Amazon's e-commerce business not to grow, somebody's going to need to build out some service that becomes so big and massive that it disrupts Amazon. How's that going to happen? You could make an argument that Amazon hasn't even really disrupted Walmart that much, which is crazy to think, because think about how big Amazon's e-commerce business now. And you think that would have been devastating to Walmart. Like, Walmart's doing just fine. So Amazon's e-commerce business has decades of growth ahead. Like, my kids that are little kids are going to likely be shopping on Amazon when they're grown adults. Decades of growth ahead for the e-commerce business alone. Then we talk about Amazon Web Services. That's a backbone of business. That's a backbone of the internet nowadays. As long as businesses continue to grow, like, Amazon Web Services is going to continue to grow and become bigger and bigger. And they have their advertising business, which they do a lot of ad spots now on Amazon. Like, if I search a product now on Amazon, it's a lot of sponsored posts. So they make bank off that advertising. But additionally, when it comes to their advertising businesses, also things like their Prime games, they have football games on and other sporting events and things like that. And that's ways they generate advertising. There's other ways as well. So they have a whole advertising network now at this point in time. So three core businesses. That when do those companies stop growing? When do those businesses stop growing in Amazon? Dude, it's so long from now that you can't even fathom it. It's so long from now, right? Now, additionally, you're getting Amazon at dirt cheap valuations. Like, go back throughout Amazon's history and ever try to find them trading at a 31 forward P. It's dirt cheap for Amazon. For a company that has decades of growth ahead, this is dirt cheap for Amazon, okay? AMD. The only stock I believe of all 8 of these stocks I shared that I'm actually down on as of right now. But AMD is going to be an absolute beast over this next 3 years, okay? I mean, an absolute beast of a stock, and this is one I'm like, banging my hand on the table right now. Like, you see me buying, it's not just about my words, it's about my actions, right? And if you look at my actions in regards to AMD, if you follow me, if you're a member of the private stock group and you see the stocks I'm buying and selling each week, if you're a member of my Patreon, you see the stocks I'm buying and selling each week, what is a common pattern? You see me buying AMD stock almost every single week right now. And I'm doing it in my private portfolios as well. I'm buying AMD almost every single week. I'm buying AMD and I'm buying AMD. And there's reasons. Like, it's not just, let me throw some money around. There's like so much upside potential in the stock over the next 3 to 5 years, and such a low downside risk in the stock over the next 3 to 5 years. It's ridiculous. And so what Lisa Su and the team has built is phenomenal here, and it's a very big opportunity. And as far as the nitty gritty for AMD, there's a very specific video I want you guys to watch. If you care about AMD, you might not, don't care about this video, but if you care about AMD, you have to see this video I made 3 weeks ago on the Reaction channel. Jeremy Lefebvre makes money. It was an AMD and Palantir video. You could just kind of skip past the Palantir part if you want. Looks like about 93,000 people got to see that video so far. But that video there, AMD and Palantir, this changes everything. Watch that video. Specifically the AMD portion. I'm telling you, a lot of very, very good information if you're trying to understand why I'm buying the stock week in and week out pretty much right now. Watch that video. Additionally, watch this video. This one was on the main channel I did just over a month ago. Keep buying AMD and don't stop. Definitely a video you're going to want to check out, okay?